Hi, and welcome to this simple analysis of Coloplast. Is it defensive or just expensive? So, what is Coloplast? Coloplast is a Danish company. They're doing healthcare and been doing that for a while, since 54. They're on the global area, like basically they're selling products all over the world, and they're on the forefront of the research in the areas that they are doing. Some of the things that they are working on is ostomy incontinence, which is waste removal in some form. You have wound and skincare, as more general products. You have voice and respiratory to help breathing and speaking. And you also have interventional urology disorders like urinary stone disease, for example. And they also have two big platforms, Coloplast Professional and Coloplast Care, which basically are training platforms or assistance platform for help, information about products, those kind of things. So, the benefits of Coloplast, what are they? Well, they are getting more and more diversified, right? With the purchase of Atos Medical, they gotten voice and respiratory now in 2022, which indicates that they're branching out a little bit. They have well-known products in the areas that they are working on. So the consumer have a positive outlook on Coloplast, and if you have the issues they're working on, you most likely are known. The doctors are normally the ones who are branding it. They have good margins. Now they're around 20%, but normally they are above 20%. They are in the defensive segment. A lot of the products they are doing is helping people with sensitive issues, for example, leakage. And most people don't really want it to leak when they're visiting their friends. So I would say it's very likely that their products will be bought even if it is a little bit of economical struggle. They are also quite shareholder friendly. They're giving out from 70 to 80% of cash flow in dividends to the shareholder. That is quite a lot giving back to the owners. So I would say that is quite shareholder friendly. And they also have trustworthy leadership, or do they? Well, historically they have had very good control of debt, which I do like. Though it might be a small change in behavior lately, though, so it's something to think about. So, what is the negative side of Coloplast? Coloplast do have a high dividend. I did say it as a good thing, but this is the flip side of the coin, right? If you're providing 80% of the cash flow in dividend, it is expected to be more or less over 2%. 80% in dividend, that should be 4% plus. Their margins are quite high, but they are lowering. It might be due to the current market segment, right? Things are more expensive now. It is expected margins to be more difficult, but yeah, they are lowering 5%. Another company might have gone in minus from that negative feedback there. Coloplast is quite expensive, and it is very high expectations to the stock. It's always expected that they will grow, right? 50 PE, well, from 40 to 50 normally. It's a lot of expectations in there. Another thing that I would like to mention for us poor Norwegian and Swedish investors, Danish krona during timings like these are not doing that good. So if you're buying Coloplast, you need to consider that you might get a 10, 15, 20% higher price on the products. Well, not products, but the company. Something to consider for people from Norway and Sweden. They did take a huge debt uptake in 2022. I will go a little bit deeper into that, but basically, huge bond, new acquisition. Their debt to equity actually went from 1, give or take, to 3.2. So it's a huge difference there. So, simple key ratios. Currently, margin is at 20%, return on assets is at 13.4, I think, but historically it's been around 30. Return on equity is 50%, slightly downward trend. Debt to equity is 3.2. And when it comes to the price to earning though, it's 30 plus plus. It basically means that it's 40 plus from experience, but I think it was a period now that it went down all the way to 30, where it was at around 750. Let's take a quick look at 2022. So the margin is currently at around 20%. There have been a fall in evaluation at 25%. You can see they went all the way down to 750. That was more or less their bottom in 2022, and they have been able to fight their way up, and they have continued to increase their sales. So good job for them. They did take huge investment though, Atos Medical, and doing that they did take up a big bond. That bond was 2/3 of it is hedged and fixed rate in some form, so it's not as risky as it might indicate, but still it has a huge reaction on their balance, so it is quite a little bit scary for me at least. They have, as I mentioned, increased their sales, and that is even with the headwinds from China. Well, basically China and COVID restrictions, right? That is hopefully looking to be a little bit better for going forward, but we will see how that is actually panning out. They have made it lighter already, from what I understand, so it might be a good thing. So when it comes to the statement, the revenue, you see it has increased from 12,000 to 22,000, of course in million Danish kroners. It's almost double. Actually, it's a little bit disappointing that they haven't been able to break that, but still, it is a good growth. It is over 10% a year, more or less. Their results are doubled. So actually, the revenue to operating profit is closer to 30%. That should be mentioned, like before interest and taxes. You can also see in 2021 that it has been a falling result when you go down to 2022. So of course financial expenses matter here. They didn't really have that much loan in 2021. So that is something that you need to be a little bit wary about, is how will this bond impact in the future. Another thing that I would like to mention is they also do have financial income, so it might not look as bad as it is doing here. Here, for example, if you have financial expenses and income, it is on the positive side. So it's just something to mention. I've just highlighted this to make it easier to hopefully see a little bit more of how the bond is reacting. Other than that, there have been some increased costs, but EBIT margin have a change of 3%. Something to think about. When it comes to the debt and debt handling, it has been an increased debt uptake. So in 2014 to 16, no debt, looking amazing. As a super scared investor, I'm like just wow. But when it comes to 2017 to 22, it's been a slow increase most of the years. So this is not from the cash flow, right? This is just interest-bearing debt and leases when it comes to the balance. 2022, big one. But I want to repeat it. A lot of it is hedged and fixed, so it might not be that bad. But here you can also see their debt to equity, normally around 1, now 3.2. It's not a pretty balance anymore. Is this behavior weakness or strength? It's actually difficult to say. I would say it is a weakness that you're starting to take more and more risk, right? But it might be that they just have so much faith in their acquisition and the skills of where it will go that they're certain, and they will go back to paying down the debt. They will have control of the economy, and the cash flow will just look better and better. It's difficult to say, like only the future will tell, right? Like I'm looking forward to the next few quarterly reports just to see how well Autos is doing and how much cash flow increase it will be going forward. If they will be able to beat 2022, like I really hope so. It's a lot of expectations in the stock. Yeah, it's interesting. When it comes to the cash flow though, it's more or less close to doubled. So from 3,000 to 5,002 in 21, and then it's like the little lowering. But at the same time, when you're having to pay a lot more in financial expenses, it is expected that that is falling down a little bit. They do give quite a lot of dividends, as I have mentioned, 75 to 80% of the cash flow. I think it is a little bit too much due to the price to earnings value of the company, but at the same time, they do show that they're willing to give it to us. Their investments have been stable around 500 to 1,000 most of the years, and they have been able to pay most of the debt, or well, not take up any debt when it has been like that. But due to the high dividends, you can see that when it's going a little bit outside of the expected levels, debt will take instantly. This is interest-bearing loan taken off from the cash flow. Here it's more paid down, right? And then you can see the trend is going slowly up again. So, and you can also see that the more and more leases, it actually started in 2017, if you remember from the debt here. Here is the first sight of leases in a balance, but here you can see that they're only adding it into the cash flow in 2020 to 2022, at least in their own segment. It's just something to think about. Is this a change in the behavior of managerial style? Where is Coloplast going forward? It is expected that they will continue their growth, right? The new acquisition alone is expected to grow around 8 to 10%. This, I hope, will create a portfolio of stable cash flow. And as you can see, this is pictures from the presentation, by the way. You can see that they don't have a lot of key competitors. It indicates that it's easy to keep the margins, hopefully grow it. And you can also see on the macro trends that it's a lot of upside risk to this stock. And that is good things for the stock in general. One thing that I would like to mention that I found interesting is Autos Medical, right? This is a new one. 85% market share. And you can see they're expecting to penetrate a lot of white space. So they're expecting it is a lot of users out there that don't really use anything right now that can use it for help. With that market share, with their goals, that is what they're going for. It's a lot of empty space out there that they want to sell to. The margin, I expect to go back and get better again. It's difficult to be sure, of course, but 22, 23, hopefully the electricity prices will go down in the future. We will have gotten back from the situation that is going on in Eastern Europe. Other than that, the stock is filled up with expectations, high risk, 50 PE. I should mention, if I haven't already, that medical companies often have a higher PE. You see a lot of medical companies from 30 to 50 PE, so it might be expected. I don't personally like it still, but it's something to think about as well. One downside risk, though, that I'm thinking is like when it's so few competitors, is it possible that some new ones, unicorns, might come in the game? It is possible a risk, right? Other than that, it is expected that the sales will continue to increase, especially due to the China is opening up and also, well, the macro trends is looking good, right? Another thing to mention, healthcare, defensive, safety. If you're sick, you want help. Current situation is that Western Europe more and more socialistic, or not every place, of course, but this normally, well, not only Western Europe, even America. And this creates more push for free healthcare for consumers or users of these products. So that might be a good thing. Other than that, I would like to mention reforms as one thing that is of interest and that you can see here. Coloplast have decided to refocus their research and development efforts in ostomy care platform with skin protective technology due to a new published guidance on medical device regulation. So basically, it classifies this technology now as a class 3 device. So this is called Strive 25. Here you have growth, a little bit about Atos Medical. You can see it's expected that they will grow 8 to 10% organically with an EBITDA around mid-30. So it's a little bit better than what they're currently having themselves. You can also see that they're improving their US ostomy performance, which is a good thing. It's been expected, and it's a good thing that is finally happening. And also their sustainability is going up. They're reducing emissions and currently working on improving their products and packaging. Other than that, in operational efficiency, Costa Rica volume site have just been opened, ramping up, and yeah, here's a disclaimer. So this is not financial advice for anyone to buy or sell a Coloplast, though it is a simple analysis of a Danish company to help with some insight. Some of the main areas that I'm looking at for resources is yearly reports, quarterly reports, and presentations. I'm also looking through DNB analysis and Nordea analysis when I have the chance. I hope this helps and have a good day. Cheers!